All right. It is late Tuesday night. It's actually Wednesday morning. Did not get my Tuesday cast done. So I'm going to do it now. Kind of a rough day in terms of trading results. But I'm going to start with just market views. We'll review results at the end. So I continue to call BS on this market rally in the S&P. I understand the money flows argument, but I really think that gets trumped by the Fed meeting and the Fed generally. Don't fight the Fed, and the Fed has turned hawkish. So, this whole Omicron thing I think was a red herring, and I understand why we've come back and tagged exactly where we left. This is where Omicron started over there. And we came back and tagged it in the S&P. Okay, I get it, but here's a problem. The Fed's turned hawkish. Don't fight the Fed. Where are we in terms of the VIX? We are not back to where we were pre-Omicron. We're still 2.9 vols above it. That, to me, is a bearish divergence. Makes it harder to trade because, the lower vols are sweeter in terms of getting in a good price. But yeah, I'm calling BS on this. And vols are certainly much more reasonable now than they were, 2 days ago. We had that big discussion last Friday on those lows and just saying like, no, I'm not gonna get in here. And obviously that was what I called. I do think I think there's a great shorting opportunity right here. I think we're going to continue to get great shorting opportunities in the next 2 trading days. There's a lot of money flows that are buying in the next few days. But so I'm predicting chop for the next 3 days. But the concept of closing the month at 4,400, which I think seems impossible to many right now because we've gone from uber, bearish 2 days ago down here at 4,500, seemed perfectly reasonable December 3rd in it. Now it seems far-fetched, but I think it's still in the cards. All right, next, crude oil. Crude oil, I continue to not understand the argument for why it should be $12 below its lows while the S&P is 1% below its lows. I also don't get the argument for why it's $7 below it was when Omicron got announced, and the S&P is basically even with it, right? That doesn't make sense to me. And the underpinnings for crude remain solid, a lot more solid than for the S&P. So unless we get like a truly earth-shattering hit to real demand, a drop in real economic activity, I see crude as an outperformer, and that includes even if there's weakness in the stock market. This happened in 2007 into 2008. So, but this I think likewise appears to be an unfavored opinion with the current market. I think there's a lot of people out there that are bullish crude, but I think there's a lot more who've abandoned the thesis. All right. Sorry about the yawns. Coming to natural gas. Boom, boom, boom. Natural gas is up in the night market, and it looks like we just challenged yesterday's high, 82.9. We just hit 82.8. Okay, so that's interesting. Definitely fun to watch it here. If it breaks out, could break out pretty substantially. Yeah. I've got the underpinnings like on a 4-hour chart. I kind of like this because you got these 2 buy tails here, and now we're coming out. This is a classic sort of buy tail, and then the sort of like acceleration up sort of pattern. Obviously, we've got Monday's high to contend with, 88.6. We are So lucky I'm long. So I'll say if I'm so lucky as to have that problem, we first have to get through 82.9, then 88.6, and then, there's a good shot that it could take a run at 410. I remain bullish only for technical reasons. I asked Sunday night or Monday, whenever it was, Monday, I think I asked, is 373 a fair price for natural gas? And I've been thinking about that. And I think it is. I think it's a fair price for natural gas. Companies have made it clear that they'll respond to a price above 350, and I've been very impressed with the supply response. The the argument that I don't know if you remember, but there was a time in the not too recent past that we were saying natural gas could be in the teens this winter. There's 10,000 $10 calls, open interest. There's still 1,200 open interest calls at a 20 strike price for January. So, I don't get that. I don't see that. I don't see the argument for that. The supply response has been robust. So I think 373 is a totally fair price. So then why would I still be long? Why am I long calls? Basically, that oversold nature of the market last week, combined with these super bearish weather patterns, I think we could see a rally purely based on a relief from the super bearish weather forecasts. And, it's, I think it's been a long time since a lot of people hit buy on their trading console in natural gas. So, could see a one directional. The last time there was really an impressive rally was the day after Thanksgiving, and the time before that would have been, November 22nd, I guess, November 15th. In some ways, you got to go all the way back into October to really get these, I think the last time some people hit their buy button was in October. So anyway, speaking of weather forecasts, this is kind of off topic, but I feel like winter has shifted. Like meteorological winter used to start in December and go through the end of February. Now I feel like winter starts in late December, like 3 weeks late, and goes through late March. I think there's only been 2 times. I live in Wisconsin, and I think there's only been 2 times in the last 20 years where we've had a colder than normal December, or let's say November, December, you're ahead in heating degrees by December 15th. It doesn't happen anymore. So I really think winter has shifted. All right. We'll review trading results real quick. So here are the trades for this week. We are on our 6th trade, and I would put on a 7th. The big winner was crude on Monday. We had a winning trade in S&P, just a very short term. Made some money on silver, but it was nearly inconsequential. Really didn't get much action. Silver did go up, but not enough to make it really noticeable. And then we had that bad crude oil trade last night. This is a losing trade, and I don't think it's gonna not be a losing trade, because we're 50 points above the nearest strike I have, and it expires tomorrow, or later today, I should say. So I've basically written this off. It's possible that we fall from here, but yeah, I don't think it's going to get down close to here by the time it would make it a profitable trade. So that one I'm basically written off. Natural gas, like I said, I'm still in natural gas. Not looking great now. I'd want to see us break that high, and we didn't. If we wind up with a sell tail on this hourly, that would not be a good sign for a natural gas bull. I will also say, we have started to resolve the oversold nature of Natty. So we had all this like unilateral selling all through here. And then the last 2 days have been really pretty balanced. So I'm willing to be short this. Something I'm becoming open to. Probably not for another couple days. There's also some, evidence of like seasonal change in trend in natural gas right around this time in December, like call it December 8th through the 15th time period where you see inflections. I don't know why that is. I'm assuming it has to do with the weather. I don't know that there'd be any explanation for why a pattern would switch around the second weekend of December, but maybe a meteorologist, if you're a meteorologist and you know of something like that, let me know. Yeah, it's just something I've noticed is that a lot of trends reverse on December 8th, 9th, and 10th in the historical charts. Once again, Vols have sold off and are more attractive if you're of a bearish mindset. We are extremely overbought on a short-term chart. I think our retracement to 46.30 is totally doable. I just don't know that we'll get there by the close of today's session. Even a retracement to 4,600 is believable. That would also fill in a gap in the day chart back to 45.95 or 46.11, either of those. Again, next week is the Fed meeting. We're still out of whack with crude. That has gotten better, but let me show that. But here's that crude S&P ratio, and so we're still, quite a bit above fair value. I would say is down here. So we're at 65 now, and I put fair value at like 60. So that means the S&P has to either fall 8% or crude has to go up 8%. Between the two, at this point, like for the next couple days, I think that crude is the one that's much more likely to make that move. So I am looking to buy crude calls on a test of the 50-hour moving average, which is about $1 away from where it is right now. All right. Well, that's the cast for today. Thanks for watching if you're watching. And best of luck. Cheers.